The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman here. This is the Tiger Technicians Hour. My pleasure to be here Wednesday, August 22nd. And a very interesting market we have here. The Dow's down 45, S&P's down 296. The comp index is, the comp index is now, it was actually acting quite well, down 2 at 3,064. You've got gold almost unchanged, just up 40 cents. And silver is at 29.52. Platinum's up 9 at 15.17. Now, this, I think, is quite important. I've been looking closely at the copper contract. Copper right now is, let's see, I'm trying to find up $1.30 at 3.46. So once you start getting close to the 3.48 area, that's going to be quite good for copper. And it mustn't break under 3.42 in the next couple of days. Crude oil is unched at 96.68, and you've got bonds up 26.30 seconds, and the dollar is down 3 ticks at 81.89. Let me go through what I'm looking at, and most importantly, what I'm looking at is a couple of things. The volatility index is something that I've made a big deal about for quite some time, and that volatility index at this point has jumped a lot. But that doesn't put it into perspective. What is in perspective is that the volatility index at 15.20, having hit a high today of 15.52, that is over 2 points higher than just 4 days ago when it hit 13.30. But it's still very, very low. And that tends to show, in my opinion, buying, not power per se, but the buying activity, kind of the velocity of buying as it stands right now. And in this particular instance, I'd be looking at a punch, and really will be a punch if it pops that high, into the 1647 was the high of the 8th of this month, and the gap down from the previous high was 17.56. I would say that if the volatility index, if the VIX index starts to climb into the 17.50 area or higher, this market will start to decline with more speed, and certainly more issues will be going down. Now, what's happening right now is the Dow at minus 50 is way worse than the S&P at minus 3.23, although it doesn't sound like much. Normally, the ratios that I'd be looking for say that at this particular point shows that there are a couple of Dow stocks that are much weaker. Now, when we're putting the package together, let's just run this through. The three bears are the volatility index, the VIX index, bonds, and I'm going to use the TLT at this particular point. The TLT is up 1.04 at 123.43, gapped up. Now, it made a low just on the 200-period simple moving average just the other day. It went down to 120.52. So this is about a 1% rally. But in the context of what I've been looking at in the weekly chart, my belief has been that the bulk, I said this last week, that the bulk of the move down had probably been made, and that we might be looking at more of time than price. That will absolutely change, and substantially, if the TLT closes, certainly if it breaks and any intraday move or daily move goes underneath 120.60, that was the low of the 18th of May. If there is a close below that level, and the 119 area starts to be a target, or at least a place where, well, this is the 200-period exponential moving average in the daily chart. Now, what I'll do is, now, first of all, my service is the opening call. It's a very comprehensive look at the markets every day, every single day, just great deal. I spent a lot of time, even spent a lot of time last night and very early from about 5 o'clock this morning, studying the charts, giving an analysis of the Dow based on the Chapman wave, slightly different to what we've been looking at, more what I've been looking at with the chart that I showed earlier, where the technicals were there. By the technicals, I always apply the MACD and the slow stochastic, the moving average, convergence, divergence, and the slow stochastic. Also, it includes the 9-period moving average and all the other different moving averages. Now, the 200-period daily is at 119.94. Almost got there the other day, but now it's bounced, and the stochastic is trying to move higher. It's at 15%. Needs to get above 20%. The MACD is the fast-moving average. That's this line here. I always show these charts. It's the daily on the left, the weekly in the middle, monthly on the right. And at this particular point, the TLT is saying, I've had a chunk of a move. You could even think of it a little bit like an Elliott wave with 1, 2, 3, 4, and now it's gone to 5. 5 might not be complete because it needs a little coda to it. But at the same time, it's the weekly chart that's so important. The MACD and the slow stochastic are very negative. So it's going to be price movement and how close the price gets to 125.23. That's the 9-period moving average that was fabulous support ever since May of this year, and all of a sudden has turned into resistance. So that's the TLT monthly chart, as I've said before. This is the Lehman 20-year iShare T-bond fund, the TLT, trading at 123.51, up $1.14. Almost any way I count it, I get this as leg C. There's one way where it could be a leg D, but that means that I've got to exclude the fact that it made lower lows in the Chapman wave. There's only one time that you can do that, and that's in a technique that I call the Chapman wave flat base restart, and then it's the Chapman wave flat base restart that is unconventional. That's the one there. You can go to a lower low, fractionally lower low, but it has to immediately snap back. That's the one I was talking about when I was looking at the S&P futures, and I showed my subscribers, which I do every day. I show the E-minis in 10-minute and 120-minute time frames, and I explain what's going on. And what I said, I typed it in here, Chapman wave flat base restart. That was with the support at 1410. And what I said that if we go to a leg E or D and it fails from there, because of the pattern that was forming, there could be quite a sharp pullback, and that pullback will probably take you back to 1410. Well, the low this morning, yesterday the low was 1406.50, and the low today is 1406, 50 cents lower. And this particular pattern says that while it's very negative, it can, but it has to happen very quickly, become a big positive by popping right back above the previous support, which is 1410, and if it holds there, that can be positive. If it pulls back, then you got to wait for that retest, and you got to look at all the other technicals that go with it. So what I did with my subscribers is I said that if we have 4 short positions already, 2 long positions, one's doing very well, one is doing okay, but the 4 shorts are doing very nicely on the downside. And what I said, we would add another short position on the index, one of the indexes, if certain conditions were met. And it's only under those conditions that we wanted to add a position that actually took an index and made a position on it. And one of the reasons being the volatility in the market, both overnight and intraday, has been such that holding either a long or a short of one of the indexes has been kind of hazardous. And one of the reasons for that is that the prices have been, even though there's been an upward bias, the pullbacks have been pretty sharp, just until recently when the last big move up. And even then there was some choppiness. In this particular instance, this is very clearly, now I'm going to go back. So we went to the VIX, we went to bonds. I'll just quickly add the dollar right here, dollar index. And remember, it's 877-927-6648 is the number to call. Love to take your calls. And we're about to go to a break, but before we go to a break, the dollar went to 84.10. Now, in the ChapmanWave, the technique that I use, here I'm showing, let me move this away. I'm showing the monthly, I'm moving the monthly away. I want to go to the dollar weekly to show how similar the weekly is to the TLT. Look at this. You made a peak D at 84.10. In ChapmanWave, what you look for is a buy mode that takes you at least to a peak D. Fourth highest peak could go higher. Remember, this is different to the AB equals CD. There's a particular technique that uses each higher peak to label it. An uppercase means you're going up, and lowercase means you're going down. And on the upside, I expect at least 4 peaks if the technicals are good and the price pattern is good. And that's exactly what you got in the dollar from the low, most recent low back in, I think it was June. They went to 84.10. Now the price is pulling back. If the dollar takes out the low of yesterday, 81.79, closes under it. Then the next level of support will be right there in the 81.43 area, 81.70 to 81.43 area. Okay? Looking at the weekly chart, what we see is particular pattern, goes to a peak D, cup and ladle breakout, retests the hand, the lip on the left at 81.68, 81.78, pops up to 84.10. Now it's pulling back. It's turning the 9-period exponential moving average into a resistance. So that means that the dollar the dollar index, that is, needs to decisively close above 82.40. I would even say 82.55 to 82.63 by Friday. If that happens, that will be the third part of the 3 bears, the volatility index, VIXI, the bonds, Bondi, and dollar, Dolly. And that would say we are coming down, and that would say that the 3 bears are coming down, and that allows room for the upside. Even the upside doesn't have to be great, but it allows room to push certain stocks higher. Dollar index monthlies and leg D make a peak D if it doesn't surpass 84.10. So that says, what about the euro? Well, the EUR, USD, that's the currency pair, is in leg D. Isn't that interesting how that works? So you've gone from 1.20, that was the low on the 24th of July, and then it went peak A, peak B, peak C, broke the downtrend resistance, and went all the way to yesterday's high of 1.24870, and today's high is just a tad 4870. It's parallel. That's very unusual. So far, parallel highs in the euro. Now let's jump over to gold. GCZ 12. Gold's had a really nice move. It finally broke above the 200-period exponential moving average in the daily. That's leg D. Look how all the synchronicity between the leg Ds on the upside and the pullbacks to the downside. But if you're looking at the weekly chart, great action in the technical. The price hasn't really moved that much until it takes out 1679. Let's call it 16.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back, and 877-927-6648 is the number to call. I'm showing here the Dow chart, and it has a notation that I have. And what is interesting is that on the 4th of June at 12,035, you had 4 higher peaks. It went on the 5th of July. It went to 12,961, then pulled back. It started what became an up channel support line, and then went to a higher high at 12,977, and that was on the 19th of July. Pulls back, goes to 12,521 on the 24th of July, goes all the way up to a doji candle with a near recovery high at 13,128, and that's July the 30th. That is underneath the May 5th, 13,338 high. What is fascinating about this, it creates another channel, the dashed line channel, and that dashed line says it could rally, but every time it gets into this area, which I call the sell zone or repellent zone, it might have trouble. Well, it starts a brand new buy mode. That's the way I've called it, because I've called that where the doji candle is on the July the 30th. Called it a doji candle. That's a doji, a Japanese candlestick pattern, where the price opens and closes pretty much at the same level, and it looks like a plus sign. And then what happens is the market pulls back to the 2nd of June at 12,778, rallies to 4 higher peaks. That's why I changed the labeling. That's why this one fits very well with the technicals that I'm looking at. And where does it go to? It goes to the sell zone resistance And I've been drawing this with arch formations. You can see this if you're looking at Tiger TV. This is channel 1 right now, but I'm archived in channel 11 if you want to review this. And I want the synchronicity, and I'll explain why in a minute. This leg D, which is now probably going to be peak D because there's a lower high today. I'm pretty sure we won't make a new high above yesterday's high of 13,330 on the 21st, which is 8 points lower than the previous high on May the 5th. So that says you've got to be careful. Whenever you get, this is what we were looking for with subscribers, we're looking at this as being a resistance area, and we expected some kind of a pullback, and we were preparing for that. More importantly is that the pullback has a number of areas of very good support. First support will be, if it's today, at 13,110, the green part of the dash line. That has always been, at least for a long while now, the area that I call the buy zone or the propellant zone. And that can go all the way down to, if it's to this goes to tomorrow or the next day, because there's a rising trend line, 13,033. So you got from 13,000 to about 13,060 this week for the next couple of days of support. Now, this is where it gets very interesting. If you look at the patterns that I follow, first of all, the Dow Diamonds, besides the chart I just showed right now, I show these other charts every day. No matter what happens, I try to get these out. This is the Dow Diamonds, the DIA 120-minute chart. There's that same technique that I use, that sell zone. It went right to it at 133.02 yesterday. That is that's leg D, then peak D confirmed later in the day. Pulls back, and where is the support? The support that it should try to touch, if I'd say today, if it goes under 131, let me just double check now, 131.20, I think I said, then you've got to look for 131.00, possibly to be tested. Even 130, and the low that I'm looking at is 130.79, the low of the 10th of August. Now, the technicals are quite weak in the Dow Diamond 120-minute chart. The price, though, is still much higher than it was when the technicals were higher. So we've got to watch this closely because there could be a turnaround. There could be some support coming in the slow stochastic because it's at 24% if the market starts to test those levels. That's the Dow Diamond. Now, another chart that I like to show, and this is very important for my own analysis, is here's the 120-minute chart, what I call this is just the bear chart. Very few technicals, except for the 200-period exponential moving average. You can see here at the bottom at 12,918. That's very important. 18, that is. And 13,333 was the high. It's made a peak E and a pullback in the 120-minute chart. This is not the diamonds. This is the Dow itself. Pulls back into what's been a very beautiful containment area. That containment area goes to Dow 13,095. So you can see how things are tying together. Now, the volatility index is up 28 cents today at 1530. I would have thought that if there was going to be intense selling that continued into this afternoon, that we would see, I hear the music, got a break coming up, that we would see the volatility index at about 1580 to 1620. It isn't there. I'll be right back. Basil Chapman, 877-927-6648. Love to take your calls.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648 is the number to call. And the Dow's down 67, S&P's down 5. What's interesting is I just wanted to finish a comment about those 5 charts that I show to subscribers every day. So we got the Dow 120-minute chart. You got the volatility index, which is, I wouldn't call it benign. It's up 31 cents, but it made its big move yesterday. We were watching it closely. If it starts to slide under 15, that'll help the market. If it gets above 50, say 15.33, if it goes above 15.55, it's going to start to put pressure on the Dow. What's very important to me is that the short-term trading index that Richard Arms developed, the Arms index, that's only at 0.74. That always makes me a little concerned because it means that the market's a little blasé about this pullback. I would have preferred yesterday and certainly today for it to spike to the 2s. That would have said, okay, now there's an overbought reading there, so an oversold reading. And I'll talk about the other charts, the Dow and the S&P daily in a moment. Let's go to our first caller. We have got Joe in Boston on the line. Hi, Joe. How are you?
Hi, Basil. How are you?
Very well, thank you.
Good. Hey, what do you think of the setup and win for going lower?
Well,
you think
I've often followed Win, and it's a very interesting stock because sometimes it does its own thing regardless of what the market's doing, and that always says to me that you can't treat it as a market barometer stock in any way. You have to look at it quite independently. And what I was looking at when I had it up on my screen it was not yet at the 104 level. It was around about a week ago. It was just breaking out to leg C in the daily chart, and WIN, WYNN, is what we're looking at, folks, is 105.78. It's up 37 cents. What's really important about this stock is that it broke down from the 200-period moving average of that was on the 8th of May. It broke under, it hit the 123.25 and slumped to 116.35, which started to move down, and it hasn't even gotten close to the 200-period moving average until 3 days ago, when it went to 110, was it? 110 exactly, round number.
Yeah.
So I know that you're also looking at the round numbers, and that tells me I've got it in leg C. I have to double-check that I haven't missed anything here.
Yeah, no, it's C. It is C. It's definitely
It is C. Yeah. Okay. Now, you see the double top in a stochastic, the way it made this little M pattern. It's pulling back. It's still, though, at 80.2%. And the MACD is still very strong. So as a short, I'm looking out at it, and if you had to ask me, if you were to put on one of those positions that you put on, like, I think you put it on Google, right?
You can sell like a call spread on the thing, like a 110, 115.
Okay, so now if you're looking at this as on a monthly chart, let's even skip the weekly chart, because the weekly chart has held the 200-period moving average, beautiful candle. Right. It's in leg A. Stochastic is moving up. MACD is good. But it's the monthly chart that is the one that concerns me, in that if WIN starts to break into the 115 area, it doesn't even, 114.50 to 115.50, all of a sudden the monthly chart will start to improve in stochastic, and it could help the MACD. So what you would need to see is almost an immediate, and today was a clue, that it was market sensitive. It's not, because it's up 52 cents, and the Dow is down 63, S&P is down 4.5. So I would do this. I'd have a little patience. I'd keep it on my list, and I probably would say to you, you might have to give up some points to the downside.
Right.
But my suspicion is, can you see how it tried to rally today? It even went to the 107.10 area. Now it's weakening a little bit. So, yes, if the market pulls back, then 103.50 would be the 9-period moving average support. This is what I would do. I'd have the patience, maybe put a little alarm or something like that. The high of yesterday was 110 round number 3 days ago. If it breaks that, 111.15 is the 200-period exponential moving average, from which you can expect there's going to be a pullback, because that line should initially become a repellent line, then a magnet. So my recommendation is to have the patience to wait to see if it's able by the end of the day. Let's just say, give two scenarios. The market is minus 66 Dow, minus 460 S&P. By the end of the day, if there's just a sudden rally and the Dow only closes down 28 points, S&P is down, actually it's so much better if the S&P is then up 80 cents or up 1. The technicals that I'm looking at are saying, because my Dow Quartet, GE, IBM, Triple M, and UTX are saying there's still internal strength. And I have to also tell you that my weekly charts in all the indexes are very strong. I'm going to show the cues in a moment. I'm going to recommend holding off. Right. And what I would suggest is, if it gets to leg D in the daily chart, that will obviously help the weekly chart. If the stochastic hasn't even gone above 38 or even 40%, at that point it's at 33% right now, I think you have your eye on a beautiful short, but I would then wait for the between 111 and 112.30, and in the very next pullback, that's where I would set it up.
What about Baidu?
Now, Baidu is something a little different. Here we go. I don't know if I've actually updated the chart. Yes. Give me 1 second. Folks, Baidu is Baidu Inc. Let me use both hands. Give me 1 second. Here we go.
Had a bad day yesterday.
So I've got A. We've got A, B.
I got an F. Or D's.
D. Wait a minute. You've got an F, but you might have skipped something, right?
I might have.
Look, D is at 125.68, and it pulls back to 125. Yeah. So you on the 2nd of August, that was D, and then it goes higher. I think it's an instant restart with an A, B, C. No. Oh, okay. I know exactly what's going on. 132.08 on the 7th, 132 round number on the 9th, and then you go higher. So it's E, F, and it went to a G, and it's pulled back. So Baidu is a little different because the MACD and stochastic have pulled back sharply. The daily, that's the daily. There's a C1, C2 top in the weekly. That's back in the week of 20th of, 20th of April. And the monthly chart has that right shoulder failure pattern that I often talk about. So are you in a position now?
No. It just looks like this is putting in the big top. That's all.
I agree. Now, how would you play that? If you were to, the ideal one was, of course, yesterday as it broke under the 200-period moving average of 125.96. I have to look at the 120-minute chart because it's sitting right on support. I have a plan. If Baidu's able to bounce to 124.50 to 125.5, Baidu's at 120.31. It means you might miss something if it breaks down here, and I'll give you that scenario. But if it pops up anywhere to 120, the 124s, it makes a little U-turn and starts to come back down, that could be the best place. If you did it now, you're risking that the stochastic at 4% is going to bounce a little bit with the price because it's so low. On the other hand, if by the end of the day the market, that was the first scenario I said, if the market closes down just a little bit in the Dow, but maybe up a point in the S&P. Now the other side of the coin is, if the Dow at 13,143 right now closes decisively under 13,100, that'll take the S&P down -8 or so, -7 or -8. It might even start to catch up. I'd buy you right then. I would grab it and I'd do that. And I would still do a small position with a tight stop. So the positions are looking out, Baidu, unless it's able to climb very strongly and then hold so that it changes the pattern to an M pattern in the monthly chart. It will only do that if it can close above 120. Yeah, if it can close at the end of August, if it closes up at 129, then I'd say that's that M pattern. The very next turnaround of that arch formation is where it's probably going to be most vulnerable. Right. So those are the two scenarios. But now this is very interesting because if we've made a bear phase, in other words, if yesterday was the top, then we've got to expect that there should probably be a close towards the low of the day today. That, to me, would be a very big signal. And then the short-term, the ARMS index will have to start to climb. So and then, of course, I mentioned how the VIX and the TLT and all that would be working.
You know what you should do,
Basil?
Basil?
Those are the scenarios.
You should come up with, you should have a NASDAQ quartet.
You know, I used to have that, but it got so biased when Apple just became the sole leader that I decided it wasn't working. We had Baidu pulling back. I'm sorry, what did you say, Joe?
You have a few more good ones out there, Amazon, Google, and a couple others, you know?
Yeah, they will. I've been thinking about that. It's a great idea, but so far, for at least 15, 20 years, I've had the GE, IBM, Triple M, UTX, Quartet. But the Qs are making a leg E, but the MACD and Stochastic are still holding really strongly, and it made a new high. So 68.88 yesterday. That made the monthly chart. I have no way of counting it other than leg C in the monthly. I can't believe it. And the weekly could be double topping, but we will see very soon. So far, the MACD and Stochastic are very good. Thanks so much for the call, Joe. I do appreciate it. I've got John on the line. I'm going to go to him. Thanks for calling, Joe. Let's go to John. Hi, John. How are you?
Good morning, Basil. Thanks for taking the call, sir.
Oh, it's absolutely my pleasure.
Say, Basil, wanted to ask, and by the way, thanks for doing that Dow Jones review at the top of the hour. Having gone through all those thoughts, I wanted to ask if you just supplement that and discuss your thinking about the following question. And the question is, with the Dow having made the May high at 13,338, falling all the way to 1,200 there in, 12,000 start of June. Now coming back up here and not surpassing the May high, what are the odds? What is the likelihood? What parameters might you be keeping in mind to tell you if it's likely the Dow will be heading back down all the way to that June low down near 12,000?
That's a great question. So now the answer is that we have to allow the market to fulfill its whatever its duty is it feels that it has to do, because when a market comes back, certainly in a V-shaped pattern, towards the previous high, you can always expect that there will be resistance there. That creates what I call a double top pattern, that there are two kinds. There's either the cup or the V-shaped pattern. Normally, a V-shaped pattern has the power to spike through, and the reasoning behind it, there's my reasoning behind it, is that the V on the way down is making lower lows, lower highs, and all the way down very quickly. So it's using momentum. That same momentum is on the upside. So the cup formation means that you come down, you make a little bit of a bounce, you come down, you're using up time as well as price. In this case, it's just mainly price that comes down. Now on the way up, that same momentum, it's like you've got to think of it as torque, like you put it into first gear, and now what's happening is you're really only in second gear as you hit that previous resistance. If you see the technical start to fail, and let's just look at the Dow, because the folks who are looking in the Tiger TV are able to see this very clearly. If you are looking at these charts, you will see that there was an up channel resistance that the Dow went into, and the MACD is pulling back, and it's just turning negative right now, but it's still quite strong. Stochastics at 88%. With the fast-moving average, the yellow line moving down quickly. But look at the weekly. The weekly has 91% in the slow stochastic. The MACD, the moving average convergence divergence, is actually very strong still, not as strong as it was when it had this beautiful, for those of you who are new to my work, if you follow this yellow line, the fast-moving average, it's a quicker moving average. In other words, the look-back period is quicker than the red line, and that red line just steadily went up. The yellow line held above it all the way through, and it started back in the week of October the 28th, where the Dow went from 11,682 to 12,284, and that yellow line never broke down until the Dow made what we call the peak D top at 13,297. Then there was that little coda, that little spike to the upside at 13,338 as the technicals were fading. But if you look now, these technicals are strong. And if you don't mind, I'm going to just put the charts that I talk about very often. Let me show you. GE is acting well, but not great. The weekly chart is still holding. I have no way other than to call this leg B in the weekly so far. The MACD is strong at 95. The stochastics at 95%. MACD is good, and the weekly chart is just steadily trying to move back towards the 2165 level, and the daily is showing a little bit of weakness right now. So that's one. But now if we go to IBM, and IBM is trading now at 197.35, made a peak E with a doji round number 202 high back on the 17th of August. Now it's pulling back under the 9 EMA. If you look at the weekly chart, it's trying very hard to, at 74% in the stochastic, to rally, but the price is holding above the 9-period exponential moving average support. I'm watching closely to see that the monthly isn't forming like what I call a hat-trick top. If you look at Triple M, it's had a spectacular move.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Basil Chapman. We are back. We're back with John in Philadelphia, and we were talking about the Dow. John, if you don't mind, I'm just going to slip for 1 minute into another chart, because I know you actually watch the S&P index even closer than you do the Dow, correct? So what I'm looking at right now is that the S&P 500 index has remained in a decisive up channel. It broke to a new recovery high, that is a high of 1426.68 in August. I have to call that F/B, and that says that the way it's going to break down is if at any point, either in August or September, if it takes out the low of 1266.74, that was the low in June. That was June of this year. What will happen is it will also start to pierce the up channel that has been in, and a very decisive up channel will go right into what we call the buy zone. If it breaks under that, that's very negative. That would be the red line. Those are the parameters. Now, the question would be, what would I be looking for if I was not just short-term expecting a pullback, but the weekly charts are still good? What would break down? And the answer is that if there's a very strong pullback, the S&P is at 1409 right now. If the S&P over the next week or so starts to slide and take out the I would even say 1394 area, that to me would say, okay, you've got to be careful. On the upside, if there's a surprise in the next 5 to 7 trading days, the Dow spikes much higher than the 13,390 into the 13,500, and the S&P is able to climb into the 1436, maybe 38 area. To me, that would say that there's a left side, right side price time match, and that we might not, with all the negative news and the press constantly talking about the financial cliff, it might be a surprise that bonds pull back further than the Dow goes higher. So those are the parameters. And if you don't mind, I'm also going to include what I would be looking for in the TLT. Because if the TLT, that's the Lehman 20-year T-bond fund, climbs and it breaks to a new recovery high above 132.21, that's going to be very positive for bonds, and that'll be pulling the market. Money will go back into bonds and away from the stocks. And the volatility index, I think, will be right back into the 20s. So I hope that answers your question.
Basil, it does. And can I ask one quick follow-up?
Sure.
When you posted the Dow weekly chart, you spoke of the technicals. You were referencing the MACD as well as the stochastics. I just observed on that Dow weekly that in the MACD, while it is strong, as you pointed out, the MACD is at much lower levels than where it was when the Dow was making its first highs up there in May.
That's a very good observation.
Is that MACD phenomena, is that a warning signal in any shape, manner, or form?
When it starts to flatten out, that is where the fast-moving average and the slow-moving average start to have just a narrow little space between them. That says that the upside is limited, but it also says be careful because they could also limit the downside. And basically what it's saying, just eyeing it right now, that the 12,894 20-period moving average would be your major support, looking at the weekly chart, and any break, it close into the 13,400, you will see the MACD fast-moving average start to rise, and you will get the stochastic holding in the 90s, 95% area. Right now it's 91. Hope that answers your questions. Thanks for calling, John. I do appreciate it. Folks, have a great day, and stay tuned for Larry Pesavento.